Hey everybody, welcome in. This might sound like something similar to what I did last week, but there's a lot of difference and a lot of news. So let's just jump in. We're going to talk about price impact. And Ark Invest came out with their model based on the impact of Blackrock. I'm going to compare it to mine, but I'm also going to talk about a whole bunch of other stuff, including what is probably the biggest Bitcoin news of the year. So as you can see, I'm pretty excited. Hope you guys are too. Hope everybody's doing well. Let's just jump in. And as usual, not waste any more time. So first of all, this is edutainment. You guys know that. You guys know the drill. So never financial advice, but a lot of exciting stuff. So again, the story today, real brief, is I believe the most bullish news of 2022 so far is BlackRock announced their new ETF fund to give people access. Remember all the stuff we covered last week. We talked about Aladdin that runs about $22 trillion in assets. BlackRock had 10 trillion. They're down about 15% because it's been a roughy start to the year. But this is used by 55,000 asset allocators. And now they're going to join the dots and give them access to Bitcoin. Again, this is big. We're going to look at some wallet changes that are a bit suspicious. We're going to talk about ESG narratives. And literally, as I've been saying for a long time, all roads lead to Bitcoin. But at the very end, we're going to compare Cathie Wood's model from Ark Invest to mine and see how they compare and see what's missing. And either way, if one of us is right, we're doing very well. So let's see. Mea Culpa, first of all, from Q1 2022. These are things I did say. I did say 2022 would be transformational. I said every institution in the world is looking at Bitcoin. I think Michael Saylor said that too. I said a few times institutional money was coming in Q2. So I knew some of this was in the works, but it came a little bit later. And I said Bitcoin will slowly eat assets that have a monetary premium. Boom. So sorry for being a little bit late, but here it is. Instead of Q2, which ended 6 weeks ago or whatever, it's Q3. But better late than ever, as they say. So my video last week, I'll send a card here for that video as to what I spoke about with the models. But let's jump into exactly a couple of the good things that we heard today. First of all, Larry Fink, he said Bitcoin has caught the attention of the people. Again, in the way he spoke about it with data intelligence and stuff like that, he said the hits on BlackRock's website were 3,000 hits during C19, 3,000 hits on monetary policy, and 600,000 hits on Bitcoin. So basically, the people that they work with don't care about anything else other than Bitcoin by a huge factor of over 200x. Now, he did say a couple of things regarding Bitcoin. He said it is a very thin market. And we'll talk about thinness. I talked about last week what thinness means and how $52 billion is very, very thin. But he said capturing the imagination is a very telling sign. And per his big data, it's a very defining statement. But again, he also said Bitcoin is still untested, but they're jumping in. So we're going to examine why. So first of all, Bitcoin adoption is up 72x over the last decade. This is Glassnode notes the number of active addresses with a non-zero balance. I thought it would be good for perspective. Again, the total addresses now, non-zero balance is 43 million. We need to get to 1 billion. That's a 23x from here. And we know once we go beyond that 10, 15%, 5% tipping point, the next 90% is very fast. And that's where we are here. Now let's talk a bit about ESG because, everybody knows BlackRock is an ESG fund. They only invest in ESG initiatives. Here's some stuff about their broad brushstrokes. They invest in securities based on overall ESG performance. Yeah, they look at active risk taken with ESG data sources. They look at pursuit of ESG or SDG issues, etc., etc. And their intent is to have a measurable positive environmental, social, or SDG outcomes alongside financial returns. Remember that piece, financial returns, okay? Very important. Now, they didn't explicitly say that Bitcoin is an ESG-approved asset, but look at this. Per Blockworks, BlackRock managed 8.5 trillion. By the way, I put a little red line under the 8.5 trillion to signify beginning of the year they had 10 trillion. But remember, they're holding assets that are going up real fast. So it's only a matter of weeks, maybe 1 or 2 months before they get back above 10 trillion, as we've seen from the way in which the stock market has been rebounding over the last 6 weeks. But they spoke about permission blockchains, stablecoins, crypto assets, and tokenization as areas which it sees potential. And they also said they were encouraged by monitoring programs by RMI and Energy Web, which it sees bringing transparency to sustainable energy usage in Bitcoin mining. That is the money shot, ladies and gentlemen. Very important. Because of that blessing, BlackRock can now invest in Bitcoin. But this irony is not lost on me. From Bitcoin Archive today, 5 hours ago, it was BlackRock that put pressure on Elon Musk regarding Bitcoin energy consumption when Tesla bought $1.5 billion worth of Bitcoin. Now BlackRock is diving headfirst into Bitcoin, effectively telling the corporate world, it's legit. Bitcoin is legit. Go ahead and get some as quickly as possible. So that is funny how things change and how they change so fast. Stunning. Now let's go a little bit further. People are asking me, okay, why? Why are BlackRock getting into Bitcoin? Sounds really weird. I believe it's because they need alpha. They're down for the year. They are also so big that they need a new asset class. It's very hard to find a stock that they don't own a big chunk of. I showed last week as well, MicroStrategy is 7.5% owned by BlackRock. Then there's also people that believe in that Bitcoin and crypto could be the 12th sector of the S&P. And who wants to be in that new sector before it even exists first? Again, you got to front run to make money. This is what I believe they're doing. And speaking of front running, there was some very strange activity happening with the new wallet number 3 that have accumulated 131,882 Bitcoin in the space of a few days. So who are they? The question is. And that is, I think, over a $3 billion investment. Again, a spit in the bucket as to where we're going. But these are some of my theories as to why BlackRock's getting in. Now, let's talk about the biggest news. They are launching their Bitcoin ETF, which is stunning. So the first thing is from Bitcoinist, $10 trillion BlackRock launched Bitcoin private trust for clients. BlackRock commits to Bitcoin and 4 sectors in the crypto space. BlackRock has been a leader in ESG, yada, yada. Okay, we got that piece. Now, Decrypt, BlackRock launches Spot Bitcoin Private Trust. Remember, it's for institutional investors. It's not for the retail clients out there. And remember as well, to reiterate, this is all wired up using Aladdin, which will determine the 55,000 asset allocators where they need to allocate and how much they need to allocate. And that's the $1 million question here. Again, those 55,000 asset managers use Aladdin to determine where to put their 22 trillion. Okay, these are all big numbers, but we'll break them down right now. But before I jump in there, I want to talk about Schwab as well. Don't forget Schwab. They are bigger than Fidelity, and they have also launched a crypto-themed ETF on the New York Stock Exchange. So again, it's happening. The adoption, institutional money, it's happening very fast. So enter Ark. This is their piece that got their attention. I think they launched it August 10th or August 9th, yesterday or the day before. And they did a simulation on the impact of Coinbase and BlackRock to provide institutions access to Bitcoin. And they modeled out what a 1%, a 2.5%, and a 6.55% allocation would look like for the Aladdin $22 trillion fund. And I was like, wow, I'm so excited because I get to break this down. I couldn't break it down yesterday live because I was doing the Tesla news, which was also more important. It had people rattle. So again, I listen to what's on your mind and I try and address any concerns. So first of all, their report came out 5 days after my BlackRock BTC model. And here they are side by side. You can see last week I spoke about a 0.5% allocation, a 1% and a 5% allocation. And that would bring the Bitcoin price to 98,000, 173,000 and 773,000 respectively. I did say it's going to take a long time to get to 5%, but a 0.5% should happen pretty much within a year by my guesses. Again, considering the vast amount that these guys move around with their technology. Again, this AI system Aladdin, if it says, oh, everybody needs a 1% allocation, it would just be big. So first of all, in another thing I just want to bring light to is I did something similar back on March 5th, 2021. I came out with my 2025 Tesla price predictions on exactly 21st of March, the 5th of March, 2021. And then March 19th, Ark came out with theirs, and ours were extremely identical. For example, the Tesla expected scenario was different by $20. My prediction was $29.80. Theirs was $3,000. The Tesla Bear was $15.35 from me, and theirs was $1,500. And the Tesla Bull was $41.39 from me, and theirs was $4,000. So again, we are extremely aligned when it comes to modeling stuff. So I just want to bring that blast from the past. My channel was new, but my models were still working back then. So let's compare the new model from Ark to mine. And I want to share a couple of little secrets that everybody was confused about. So first of all, let's talk about my philosophy when it comes to Bitcoin. And you guys know it if you know this channel. I speak about one thing, and that is the total supply will never exceed 14 million Bitcoin, because I believe there will never be more than 14 million because so many are lost, etc., etc. I know only 19 million have been issued, but again, people are losing them as they go as well. I know I'm on the receiving end of these calls all the time. So that is the total supply. Per Ark, the total supply is 19 million. And then we have the illiquid supply. I believe the illiquid supply is 11 million. That is the amount that simply is not available, because the liquid supply is about 2.5 to 3 million. They are the coins that will be sold. A lot of people that own Bitcoin, they don't want to sell. They want to keep. They want to hodl, because the people that own it long time understand where this space is going. And per Ark, the illiquid supply is 14 million, and they believe the liquid supply is 5. So again, a little bit of a different nuance, which might take into account this next piece is where the difference between Ark and I come in. This is, my model is based on what I call the scarcity principle, which is an economic principle. And the other key factor of the scarcity principle is it is demand induced. Okay, let me explain what that is. Demand-induced scarcity happens when the demand of the resource increases and the supply stays the same. Again, Bitcoin supply is growing very, very slowly. And again, people are losing their coins as quick as it's being produced. And sometimes the Bitcoin that's being produced is actually being hodled by miners. So it's actually almost nearly a negative supply being added to the market. And supply-induced scarcity happens when a supply is very low in comparison to the demand. And this happens mostly due to many things like, deforestation, drought can impact things like food, etc. The ability to get trees, lumber. But with Bitcoin, this is where my 21x amplifier comes in. So with that, that's very important. People always ask, where'd you get the 21 from? Well, that's it. And I'll do a video on exactly how it works if anybody's interested. But this is the key thing from Ark. They allocated certain amounts to become an optimized portfolio allocation. So they believe institution allocation should be between 2.5% and 6.5% of their assets to Bitcoin. Not 1% or 0.5%, but between 2.5% and 6.5%. And that's where their model really comes through. So again, assuming that 2.5% of 22 trillion, that should drive the price of Bitcoin to 200,000 per Ark Invest. And if it's 6.5%, that should go to $500,000. Again, let's look at this as to how it works in my actual model. So what I've done here is going to be a bit of an eye chart, but I have a simpler one coming, but I just want to show you the math behind it. So first of all, if you look at the top numbers, okay, they're so big. 1 to the power of 13 is actually 10 trillion. 2.2 to 13 is 22 trillion. So just remember that as you go through. And the model I built mine off last week was based on $10 trillion in asset under management and allocations of 0.5%, 1%, and 5%. Ark based theirs off 22 trillion Aladdin asset under management and 1%, 2.5%, and 6.5% allocations, all of which seem high, but also not only are the percentage allocations higher than mine, but the asset under management is also higher than mine. Again, the 22 trillion versus 10. Sorry about all the numbers, but it's a numbers channel. But anyway, their numbers come out low despite the higher percentage and higher AUM. Why? The answer is they don't use the same amplifier that I do. But even taking that into account, you can see some very interesting similarities. So in the model here, you see my calculation based on 0.5% is 98,000. Theirs based on 1% is 90,000. Very close. Then on my model of 1%, I have 173. Theirs is 200,000 on 2.5%, 2.5 times the allocation with, 22 trillion in asset under management, very different. And then their third model is 5%, mine is 5%, theirs is 6.5%. My price prediction is 773, theirs is 500,000. But I took it one step further, ladies and gentlemen. I used my amplifier based on their allocations, which is 1% of 22 trillion. That would take the Bitcoin price to 353, not 90 or 98. Second, if it's 2.5%, it'll take the Bitcoin price to 848,000, not 200,000 or 173. And if it goes to 6.5%, that'll take the Bitcoin price to $2.168 million. Sounds crazy, I know. But if this allocation is made, it will jack the price to that amount. Let me explain why. First reason, scarcity. Okay, as I mentioned last week, if BlackRock allocates 0.5%, and this assumes the price remains constant, of which they won't, and it also assumes those that have it in cold storage do not sell, $53 billion dropped today, dries up the liquid supply. Boom, gone. And like I said in the previous base case, 22 trillion times 1% is 220 billion, which is 4 times, their base case is 4 times the amount of money required to dry up all the supply today. Again, crazy. Let's go to the conclusion. This is the interesting part. So first of all, when you compare Invest Answers versus Ark Model Summaries, you can see we have different approaches, but very similar end targets. But if you assume the modifier, the amplifier that I use, the end targets are very, very different. So again, in summary, my 0.5 to their 1%, very similar. My 1% to their 2.5%, very similar. My 5% to their 6.5%, sort of similar. And if you go to the amplifier, you get typically a 4x of that price. 200 goes to 848 and 500 goes to over 2 million. So that is the moral of the story. Different approaches. If you use the true amplifier, the price will go a lot higher. So if Ark Invest is right with their allocations and the amount of money that will flow into Bitcoin, you can take my price predictions as a much better prediction of what the future will hold. And it'll take time to get there. And this is the reason. This is another way of looking at the scarcity principle. You got all these people looking for that last piece of pizza. He who is hungriest will pay the most for it. That is exactly what's in store for Bitcoin. It is super scarce. That's why I'm fascinated by the asset class. Finally, the future's bright. And of course, all roads lead to Bitcoin. Hope you guys enjoyed it. Smash the like and subscribe if you haven't already. I love doing this stuff. And I'm surprised how much people love numbers. So big thank you as well to Kathy Wood and Yasim Alejandra. I'd love to have you guys on the channel. We have so much to talk about with models, and you're invited anytime. So hope to see you all soon. Thanks all.